this presentation today has to do with phase one of how does this thing called loan process work? What does it mean? What is your client going to see? What is your client going to be asked for? And what's the process? A little bit of background about Cachet. Our main company is Mortgage Financial Services. Our team name is the Cachet team. So you'll see on a lot of my stuff the Cachet logo, plus you'll see the Mortgage Financial logo. So wanted you to be able to know, like, hey, what's going on there? Who's our team? I'm the originator. Danny, which is the girl on the far right, is our analyst. She's really the most important, if you ask me, because she catches everybody's mistakes and makes sure that the loan is actually going to get approved and closed. And that's the best part. Ariel is my assistant. She does a whole lot more than assisting. If you attended any of the virtual marketing that she's put together, then you met Ariel before. So it only works because of team. And I really, have a high level of regard for my team and all that they do. So if you ever can't reach me, there's your two gals. Pick up the phone, call them. They know where to find me. Me, just a little bit of background, been in the business a long time, have seen everything from, bond loans all the way up to high-level construction loans and anything in between. So been around the business since 1990, I guess 91. That's when my last child was born. That's how I remember. So gives you a background on what I've done. Danny, a little bit of background. She moved up from office receptionist to closing coordinator to junior processor. And I think that's important that you know, because she has background in all areas and appreciates what people bring to the party. She also knows that your closing date is the date, period, end of discussion. Our job is to hit a closing date, to have papers there so it closes and funds when you need it to. Right now, if you can give, 45 days would be great. 30 days, we're hitting some 30-day closes, but we need to see your clients early, not later, to make a 30-day close. Ariel, again, background, she was an intern for Cachet. She told me when she was an intern, I will never, ever, ever, ever want to come into this business. It's just too crazy. And she graduated and she said, hey, I love this. Would you have a position for me? So she's been with me for 5 years as well. We pride ourselves on having great customer service reviews, because it's not just about, getting it closed on time, but it's making people happy through the process, because if they're happy with us, they're happy with you. And that's what's important, is that they come back and say, hey, that was a great experience. Can you sell my house? Can you help me with my next home? So off to the loan process. And at any time, I don't know if, I think some people are on mute, some aren't, but I think you can raise your hand if you have a question. How does that work, Colin?
Yeah, I'm not going to mute anybody by, I'm not going to force mute everybody. They tend to be pretty well behaved. So if they have a question.
Oh, very good. You got a lot of smiles there. So if you do have a question, put a thumbs up. That was a great idea. Wave your hand. I have both screens up and running. But the loan process, just like what you do, does have a very defined timeline, and it all has a very defined steps. And so I want you to know what those steps are, so that you understand what we're doing and when we're doing it. And it also helps you, if you're not using my team, that if these steps aren't happening on, let's say you're the listing agent and you're like, I didn't hear anything about initial disclosures going out. Well, that means your appraisal didn't get ordered. I didn't hear anything about when the appraisal is due. Did it get ordered? It may help you navigate a little bit of keeping your transactions on track. So here we go. What's our first step? Well, first we need to know what everybody's role is. Obviously, we know what a purchaser does. The loan officer's job is to qualify people, share with the purchaser what their monthly payments are going to be in their cash for closing, make sure that they're looking at that file and saying, okay, based on what you're telling me, based on your short-term goals, which is typically cash, and it also is payment, this is what I recommend you look at. We'll help anyone who needs help with completing the loan application. And then my job is team lead. I need to make sure everybody's doing what they're supposed to be doing and everything's on track. The processor, which here we call them the analyst. I don't need anybody pushing sheets of paper. I need somebody who is taking the sheets of paper that are put in front of him or her and going, okay, this fits, this doesn't. How do we fix this so that when we get to underwriter, the underwriter says, your file looks great, you missed these minor things, and we're ready to close. So a little bit different process. My processor doesn't gather sheets of paper. My loan assistant does. My processor is the pre-underwriter. And I believe that that helps us get from pre-qual to approved and moving down the road. Underwriter takes a look at the file. We're looking for an A+ rating. So they're like a teacher. They're grading that file. How did you do? What did you miss? What didn't you miss? And our goal is always a one touch. We didn't miss anything. We went right from submission to into closing. At that point, a closer picks it up and they start working the final numbers so that your three-day CD can get out, and that's your trigger that you are within 3 days of closing. So at the point that closing takes it over, which is your title company closer, that means that we've passed the baton. The title company obviously gets people to sign everything. They fund the loan out and they cut checks, and then they return all the docs to us for purchase. So any questions on the process? I know it's a 30,000-foot overview, but every loan will go through this process regardless of where you're doing business. Every loan goes through this process of having a purchaser, a loan officer, someone processing it, underwriting it, closing it, and off to title. This is the screens that we share. This PDF is what we share with your clients. So after this presentation, if you will shoot me over your email, I'll be glad to give this to you in case you have a client who says, hey, how does this work? You'll have something that you can put in front of them that has some good information and good visual appeal.
Can I point out something real quick on that page?
You sure can.
Can you look at the line right below purchaser? Step number 1, contacts loan officer for financing information. Ladies and gentlemen, some of y'all get way too wound up in trying to find the perfect house before you know if they have a nickel to their name. So just pay attention to that, guys. Just save yourself the headache. Sorry, go ahead, Robin.
No, very good comment. For those transactions that we are seeing, like I said, the client prior to them looking, one, there isn't a Chinese fire drill when you need a pre-qual because I already have everything and I've already pre-qualled them. So you call, and you can call me on a Saturday morning at 7:30 and say, hey, we're putting an offer in today, and you'll have a pre-qual in 3 minutes. If your client hasn't applied, then we've got to go through that process, because I will typically not issue a pre-qual unless I have seen some documents. It puts a lot of stress on people if they don't qualify after you issue the pre-qual. So if you want to keep the process moving, get them to pre-qual before you start having them look at housing. It also will tell you how motivated are they. Those clients that are motivated to buy absolutely jump online, and they will do that online application. That, by the way, is phase 2 of our financing webinars. Is let's go through, we'll go through, what does your client see when they apply? How does this work? But it tells you they're engaged. It tells you that they're interested if they will go apply. And there is lots of sheets of paper. I'm not going to lie. I don't know if, people want to downplay this like, oh, it's so easy. No, it's a lot of sheets of paper. And so we might as well get those sheets of paper out of the way at the front, and then they can enjoy the process of looking for a home. So anybody have any comments? Nope. All righty, let's move on to the second part. So when I tell you that I look at what I call credit and capacity. Credit is obviously their credit report, and capacity is their ability to repay the loan. Capacity is huge. The credit report is easy. Capacity is where experience matters. When I look at a file, I'm going to look at, again, what are your short-term goals? It's the interview process they will go through after they've given me the sheets of paper. So tell me, how much cash do you want to bring to closing? Have you had an FHA loan before? Are you a veteran? Generally, where you're looking to purchase, because we may be able to do USDA financing. There's a lot of variables that go into the credit and capacity that then drive me to talk about loan programs. Your 4 major loan programs are going to be conventional, FHA, rural development, and VA. Let's cover just some 30,000-foot overview program parameters. So conventional, there's a 3% down payment program. It's an outstanding program. It creates an opportunity to kind of go head-to-head with FHA. It is a little bit more difficult to qualify under the 3% down payment because it's a higher risk loan. Why is it higher risk? Because you're putting a little to no money down. All conventional loans have a minimum credit risk score of 620. When you hear conventional, you should be thinking Fannie Mae, Freddie Mac. If you're talking bank financing, that is not a conventional loan in a lender's world. That is a bank portfolio loan. So conventional to a lender always means Fannie Mae and Freddie Mac. The down payment on a conventional loan can be gifted. Yay. Can it be gifted by the realtor? No. So you can't give up your commission to give them their down payment, any portion of it. Can you give up a portion of your commission to cover some closing costs? Raise your hand if you think the answer is yes. Raise your hand if you think the answer is no. And for those of you that didn't raise your hand at all, I think you're waving at me, right? Hi. Yes, you can, as a real estate professional, give up a portion of your commission to cover closing costs, but it can never, ever be toward down payment. Cool part about conventional is you might avoid that mortgage insurance if you're putting 20% down payment at the time of closing. If you're waiting to gain equity, as they call it here, over time, then you have to have 22% in equity. So they gig you. If you don't have the 20% to put down at the beginning, then you're going to have to wait until you have 22%. And then the mortgage insurance will automatically go away. That's the law. So you don't have to do anything when you get to a 78% loan to value. It automatically will drop off. That's the law. Can we do subordinate financing? Do it all the time. Why? Because I'll have someone who wants to put 5% down because they're limited on cash, but they don't want to pay mortgage insurance. Okay, let's tie that to a 15% second lien, which is subordinate financing, and now we have our cake and eat it too. Mortgage insurance, by the way, is not tax deductible for all borrowers. Once you hit a certain income limit, and the last time I checked IRS code, it was 105,300. So if you have a combined gross income of 105,300 or more, mortgage insurance is not tax deductible. Do you think the interest on subordinate financing is tax deductible? Raise your hand if the answer is yes. Okay, I have to see a hand up from everybody. Shake your head no if you cannot write off the interest on a second lien. The answer is yes, you can write off the interest on subordinate financing. So for your high net worth clients, that's huge. You're in a 30% tax bracket and you get to write off $10,000 of interest. You just saved yourself $3,000. Huge, huge. Maximum loan amount, that is not correct. You can line through that. That used to be our maximum 2 years ago. Obviously, I should update the presentation. Maximum loan limit on a Fannie Freddie loan is $510,400. That's how much it jumped. Is that pretty cool? October, by the way, is the month that if there is going to be another increase to that Fannie Mae loan limit, we're going to hear about that increase by the end of October. So cross your fingers. Increase is good. It allows more of your buyers to qualify under a Fannie Freddie loan. Fannie Mae will allow you, and Freddie Mac will allow you to do a primary residence, a second home, and investment properties. Please know that on investment properties, there is much different qualification guidelines, much different. No 3% down, no 5% down, minimum 20, maybe 25 if you have multiple units. So lots of different options, but some great conventional options. Fannie, Freddie, under conventional. FHA, we use a lot. You probably do too. Minimum down payment is 3.5%. Minimum credit score is 580. Right now, if we have a credit score under 620, we're gonna drill down pretty hard. and say, okay, why are we going to approve you if your credit score is less than 620? Let's take a look at your credit profile and let's dissect it and see what happened to get you to a 580 score. So on the below 620s, it's not an automatic approval. All the down payment, again, can be gifted. Why do we use FHA? Because we get a whole lot more approvals. If I got a 620 conventional borrower, I don't get an approval many times. I flip it over to FHA, loan's approved. FHA has more lenient credit and underwriting guidelines. FHA was set up for first-time home buyers. That's why the guidelines are a little bit more lenient. We want to get people into homes. We also in FHA will allow non-occupying co-borrowers, mom, dad, aunt, uncle, to help someone qualify. Monthly mortgage insurance is higher than conventional, and it's forever. It's forever. You can get to that 78% LTV, and you're going to still pay that MIP, mortgage insurance premium. That's the bad part about FHA. You just keep paying into that fund. Maximum loan amount on FHA varies by county. So if you go to Dallas, FHA loan limits are higher than they are in San Antonio. So if you're leaving, your takeaway on that is if you're leaving Bexar County, you best check if you're going to be okay with the loan limit in that county for your borrower. And FHA loans are limited to a primary residence only. FHA really wants to only have one loan per borrower in a certain geographic location. So if you already have an FHA loan, there are options where you might be able to get a second, but typically you're going to have to go conventional if you're trying to keep that house and it has an FHA mortgage. USDA, probably one of the most underused products in the San Antonio area. People don't think of it a lot, but you should. It's 100% financing. It's almost as smoking hot as VA, which is the best loan type you can get. So USDA does have a lower MI than conventional or FHA. That's cool. Like FHA, the mortgage insurance is for the life of the loan. Here's where it gets a little wonky with USDA. Not only do you have to qualify the house, that it's in the right rural location, but you also have to qualify the borrower based on income. And income ties to the number of people in the household. Another great reason to get your folks pre-qualified up front, because that'll be checked before they go out house hunting. They may be looking in at a USDA approved area, but they can't qualify because they make too much money. USDA primary residences only, and unfortunately, mom and dad cannot help you to qualify. So non-occupying co-borrowers typically are not allowed because of the income limit restrictions. VA, 100% financing. If you got a veteran, the first thing we'll ask a veteran is, do you have your VA available? Because it is absolutely the best financing option out of all of them. There's no mortgage insurance. Credit risk scores can go as low as 580, and we typically don't ask a lot of questions of veteran. Very lenient credit and underwriting guidelines. There's never an origination fee, by the way, at MFS. We do not charge an origination fee. If you want a better rate, you'll pay discount points, but you're not going to pay an origination fee on files. And on VA, it must be their primary residence as well. VA is set up strictly for primary residences. We have a lot of 100% disabled vets in San Antonio. Using your hands, so I want to make sure you're paying attention here, show me how much a disabled vet pays in property taxes on an annual basis.
Ooh.
There you go, James. He's the winner. Colin, you weren't fast enough. That's right. 0 is the correct number. That's huge. Think about how much more that veteran can qualify for in the event that they have 0 in property tax liability. It is huge. So don't discount that one, because a lot of times the veteran is looking to move up because they don't have that property taxes. Anything outside of conventional FHA, rural development, which is also called USDA and VA, is a bank portfolio product. And it could be hard money, it could be a traditional bank, but it is called a portfolio product. And there is just a plethora of portfolio products out there and available right now.
2 full quarts to it also.
Pardon me?
No, there's some new people, Robin, that came in and they had their mics on, so I hushed them.
Ah, got it. Anybody have any questions about the loan program comparisons? Super do. And here's what I tell everybody. If you don't, most real estate professionals are not going to be loan officers. They're just like, if they can get a loan, that's great, because then I can make a sale. Get them to me. If you're experienced, you'll know how to fill in the blanks on your contract. If you're not experienced, we fill them in for you from a standpoint of, we have a little template and say, here, this is what you put in these boxes to make sure you got all the boxes completed correctly. So feel free to reach out for that service.
Robin, just real quick, I want to throw in there, guys, on that FHA one. Yeah, when you go to that third-party financing addendum, which I'll shoot another video about. I think I've already got one up, but I'll do another one. Most of the time, talk to Robin about what needs to be filled in there, or whoever, whatever loan officer your client chooses to use, because FHA's got a couple of different ones. The most common one's called a 403B, right? And that needs to be in there.
203B.
203B, excuse me, sorry. 203. And that needs to be in there as part of your financing addendum. So talk to the loan officer to make sure you're filling that out right. Don't assume you know anything and everything that goes on with that. Just one more time before you send it in, it's all written down, and it kind of prevents you from looking like a fool too.
We have a little cheat sheet we use, and if you call and say, hey, I need some help filling in the blanks, we just shoot you over. This one pager has all the numbers lined up to your contract, and it says fill this in on this line, this, and this, and it makes it super easy so you can keep it moving. We also will check your contract. We have a contract review at the beginning. If we see anything that needs to be fixed, we'll tell you as early as possible, so to avoid the Chinese fire drill. So financing, that's what we do. We look at their credit, we look at their capacity, we ask a lot of interview questions, and then we will make recommendations to try to hit what their goals are. Everybody does have short-term and long-term goals. They just didn't know it, and it's our job to interview them so that they will dialogue and communicate what they're looking for. Within that as well are down payment assistance programs. Those are called bond programs. Bond programs are a standalone product. Some of them are tied directly to the loan type. Some of them are subordinate financing, but we do a lot of bond loans, which allow people who do not have the cash that they need for conventional FHA to keep, to move forward with home ownership now versus having to go save for the next 2 years. And who knows where pricing will be. So bond products are a whole different day of discussion, but bond products fall into the category of down payment assistance. What do we ask for? Like I said, we ask for a lot of sheets of paper, and we try to make it clinical and quick. So when someone goes online, they do the online application. That gives us a very, very good overview of what we're dealing with. Are we dealing with a self-employed borrower? Are we dealing with a salaried borrower? Are we dealing with an hourly borrower? Income is one of the toughest things for us to calculate today until we have documents to actually look at their income. We realize that some borrowers, when they fill in that blank, the question is, what's your monthly income? Some people fill in annual. So we get all excited. Oh, this is outstanding. They make $65,000 a month. And then we look and they're a teacher. Well, we know that's not right. Or people will put net. It says, what's your gross monthly income? And someone will put, I got a guy right now, he's on Social Security, and he put that he receives $1,100 a month. I know he doesn't get $1,100 a month. I know there's Medicare taken out of that, but I got to see his gross. So the application is a great starting point in order for us to be able to ask for the right sheets of paper. What you're seeing on your screen is generally what people are going to be asked for. But this is a personal experience. Nobody is generic. So when we get an application in, one of Ariel's tasks is that she looks at the application and she asks for specifics. We look at the credit report. We have a gal whose name is Robin Morton, but she also shows up on the credit report as Robin Bauer. She shows up as Robin Ortiz. Ariel will say, hey, if there's a divorce decree, I'm going to need it. That stops the train wrecks that you have probably encountered where you were told borrower qualifies And then a week before closing, borrower doesn't qualify. Well, because some new sheet of paper probably got introduced, and that new sheet of paper created a problem on that file. So as much as we would like to say there's not a lot of sheets of paper, there is. We make it very specific. We will keep drilling down, and we'll get documents. Ariel will review them. Within an hour, your client gets an updated list. Within an hour, your client gets an updated list. Within an hour, your client gets an updated list, to the point where we have enough documents to get them pre-qualified. Always, we're going to need one form of identification. Typically, the driver's license will do it. On some loans, we need two, which is driver's license and social security card. Always need to know how they're getting paid, right? Pay stubs. If they're self-employed, we're going to need 2 years of tax returns. If they have social security, disability, or retirement, we need their awards letters. How much is it this year? How long is it likely to continue? Let me see what your deductions are. We need 2 years of tax returns on self-employed always, but there's times we need it on others. We always ask for them. Why? Why would you ask for them if you didn't need them? Because how do I know I don't need them?
Right.
I ask for them to make sure I know what's on there in the event I were asked for them in the future by an underwriter. I already know how to navigate it. It's all about the navigation. It's all about the navigation. Experience matters. Who's looking at your file? How many years of experience do you have? On your team, how many years of experience does your team have? Right now, I see a lot of train wrecks. I end up getting files from other lenders that they can't make work. I turn around and I make them work. Am I doing anything magic? No. I'm just taking a different approach because I have the experience to know how to take a different approach. We always need to know, where are you getting the money? Bank statements are my personal worst nightmare. I hate looking at people's bank statements. I really don't want to know that every Thursday night at 9 o'clock, you are going over to the liquor store and buying up for the weekend. I don't care. I don't want to know. I don't want to know some things that you see on these bank statements, because people use their bank accounts, their debit cards. You see everything. So Danny, who is our analyst, she reviews it. She catches all kinds of stuff. I got a file right now I turned in. She comes back to me and she goes, look, they're making payments to the IRS every month. Picked up the phone, called the client. Hey, are you an IRS repayment plan? Sure am. How long is that repayment plan going to last? Well, probably another 2 years. I had to pick up a $346 a month debt that, thank goodness, these people had enough income to qualify. But if somebody wasn't looking at all that ticky-tack details, I would have missed it. We would have gone, along our merry way, would have gone in front of an underwriter. And guess what? Either they wouldn't qualify, which in this case they did, but now I got to go get more sheets of paper. Okay, now I need you to go get me your IRS printout, show me your repayment plan agreement. I need to know how much you owe. Go on to irs.gov, pull up your statement. Lots of extra sheets of paper that at the beginning, when I'm not in a time crunch, people are annoyed, but I got to get them. But at the end, if it was caught at the end, closing got delayed. Closing got delayed. Bank statements, like I said, my personal nightmare. Brokerage and retirement statements, we're looking for liquidity. Credit and capacity. Capacity is how much cash you have left in the bank. Because if you had a hiccup like we did for COVID, are you going to be able to make it? Do you have a little bit of reserve so we can pull you over that line for that 3 months until you went back to a full-time employment status? Assets are very important. DD-214s, if you know anything about VAs, that's their retirement statement. Divorce decrees, child support statements, child support receipts. Picked up a child support problem on a bank statement the other day, homeowners insurance, and so it goes. We try to be specific so we can avoid the train wrecks and the Chinese fire drills at the end. In the event your client calls you and says, hey, they're asking me for a lot of sheets of paper, what do you say to them?
Do it.
Anybody else have a pat answer that they give their clients?
Yeah, I always tell them just
Nope.
do it. I actually warned them. I'm very forthright on it. I said, hey, look, you're going to be asked for all of this documentation, and right at the end, they're going to ask you for all of it again. Heads up, it's because they're making sure that you didn't get fired or lose your job a week before closing.
What we tell folks after we pre-qualify them is, now that you're pre-qualified, set up a folder. Every time you get a paycheck, put it in that folder. Every time you get an asset statement, put it in that folder. Because when you find a house, I'm going to ask you to send me everything in that folder. Because we have to update pay stubs and we have to update bank statements. Everything else is pretty well not time sensitive. I mean, your W-2 doesn't change, right? Your tax return doesn't change. But those documents encourage your client, and they feel much more empowered versus having, I wish you had told me that. Well, we do tell them. We try to get them prepared. We do verify employment at the end. You still at the same job? Because if they're not at the same job, your loan just went south. So, but up front, we try to make it specific to your client. We stay on top of them quickly. If they are not responding, we will get a hold of you. We'll say, Jackson, we've asked your client 5 days in a row for the same documents. Can you give us a hand here? Otherwise, we will not bother you it's just moving along. It's just moving along. I'm not going to cover it today, but I do want you to know, for those clients that don't qualify, we do give them a path to home ownership. We tell them exactly what they need to do to get qualified, and we tell them how quickly they can do it. We stay with them for 6 months, regardless if they respond to us or not, and we take a lot of clients back to our agents 6-7 months later and say, okay, they're ready to go. So you worked hard to get that lead. We worked hard to try to see if they can qualify. We need to team up and make sure we turn them into a sale. And so it's the path to home ownership. Do's and don'ts. This is what we tell them. Do not quit your job. Do not get another job. Hang in there, people. Hang in there. Don't change employers. Do not allow anyone to make an inquiry in your credit report. Do not go shopping for the furniture you're going to buy to put into the house. Do not even start that process. Do not change bank accounts. Do not transfer money. Did you know we have to track every single transfer? Every transfer. So if you were hiding a bank account because you had overdrafts in that bank account and you transferred from your primary account to that other account, I now have to go explain all kinds of stuff that we could have avoided. Transfers are a nightmare. Do not make large deposits that can't be sourced. If you can't show me where that money came from, I'm not going to be able to use that money in qualifying. Do not purchase any other real estate. Well, I hope not. Do not apply for credit anywhere or complete any other credit application. Do not charge on your credit cards. Don't start a home improvement loan. Do not list your home for sale if it's a refinance, and don't finance any purchases. So just keep it all even, Steven. Don't do anything out of the norm. Please do continue making your payments on time. Keep copies of all your bank statements, pay stubs, and statements on bills being paid. Make your payments on time, and then call us anytime. So it's the do nots that we run interference all the time. This one you might like for yourself. I do send it to clients because they do get a lot of terminology that is specific to our industry, and we do very much try not to use acronyms because I would be offended if I didn't know what stuff meant. But in the event they're like, what's this, what's that? This is a little directory of what is amortization. That shows up on some of their docs. What is an appraisal, loan to value, truth in lending, etc. So a little bit of mortgage terminology. FAQs, we get these questions all the time. When my loan officer asks me if I want to waive escrows, what exactly do they mean? Raise your hand if you know what that means. I see one hand. All right. Waiving escrows means that you have a Fannie Mae or Freddie Mac loan, and that you are not putting 1/12 of your annual taxes and 1/12 of your annual homeowner's insurance into your mortgage payment. So each year, you're going to have to write a tax check in sometime in December typically, and you're going to have to pay your insurance agent directly out of your bank account. So waiving escrows means your mortgage payment is principal and interest only. What does my mortgage lender mean by points or origination fee? How does the annual percentage rate differ? We don't get a lot of APR questions anymore. APR tells you what you paid for that mortgage in the first year of the loan. Well, why would it be different? Because you have closing costs. Not only do you have interest, but you have closing costs. Those closing costs affect the annual percentage rate. So do you think the APR is always, give me a thumbs up or a thumbs down? Do you think the APR is higher or lower than the note rate? That's your thumb. Correct. Thumbs up. It's always higher. If you see an APR lower than the note rate, there's something wrong. What is private mortgage insurance? Do I have to have it on my loan? Will I have two separate payments if I have a second lien? By the way, you will have two separate payments if you have a second lien because you have two different lenders. Why did I receive a loan estimate? What is the loan estimate? The loan estimate is a guarantee by the lender of charges and tolerances. It gives your borrowers an idea of what they need cash for closing. Will I get a copy of my appraisal? Every single time. That's a requirement. Did you know that the appraisal has to be in your client's hands at least 3 days before closing? If you're using a transaction coordinator or using a transaction coordinator service, these are some of the things that they will track for you. Did the initial disclosures go out? Did the loan estimate get acknowledged? Did the buyer sign an intent to proceed? Because without the intent to proceed, we can't order an appraisal. Did the appraisal get ordered? When is the appraisal due? Did the file get submitted to underwriting? These are all milestones that you would track as a transaction coordinator or yourself if you're not using a transaction coordinator service. Did the 3-day CD go out at least 3 days before closing? Because if it didn't, you're not closing on time. Those are the milestones in our industry. And where do I go for closing? Do you know how many times clients ask me that question? I'm like, have you heard from your real estate agent? No. Okay, well, the first thing you're going to want to do is get a hold of your real estate agent because they're going to help you with that. They don't know where to go to close. They're a little bit confused on the closing process most of the time. And I'm talking even experienced clients. Can you close by a mobile notary? All the time. So if you have a client who isn't comfortable, you need to push down a little bit on that title company and say, I need you to send a mobile notary wherever it is your client wants to close, especially in today's COVID world. So what do you bring to closing? What do I tell every one of your clients to bring to closing? What are you telling them to bring to closing?
Identification, payment if it's not wired, and a smile and some time.
You are exactly right. That's exactly what we tell them. We tell them, be sure you bring a valid form of identification. Did you know right now that a lot of people are driving around San Antonio with expired driver's licenses? Do you know why?
COVID.
COVID. They're not getting new driver's licenses. They're getting a sheet of paper that says you have applied, and your lender and your title company should accept that because there's no way for them to get an updated driver's license. So those are the steps that we go through. Those are the general documents we ask for, the loan programs that we evaluate, the questions that we answer on a general basis, and a little bit of terminology. Phase one of how does this thing called mortgage process work? Anybody have any questions? You're making me feel badly. That means I did something wrong if you have no questions.
No,
Hi, this is Blanca. I just came in late, so I just need some contact information, please, when you're done.
Super.
Thank you.
I'm going to go back to the first slide. If everyone can jot this down, if you'll send me an email, I will send you this portion. I won't send you my team stuff. You don't need to know all about that again. But I'll send you this portion so that you can use this also to send to your clients. How come and why do we want to get the process going? Who are we dealing with, et cetera? So The best way to reach me, and you'll get this when I respond to you, is my mobile. That's my office number. Sometimes you'll catch me in. Colin will tell you. Many times you won't. My mobile is 210-215-8585. 210-215-8585. I would tell you that I am an instructor for Champion School of Real Estate. I teach real estate finance, and I also teach new loan officers. And the reason I'm telling you this is because there is not a question that I have heard that I think is a dumb question. It means somebody has not approached the material in a manner that you have been able to grasp it. So if you have any questions relating to this whole process called financing, feel free to call me. If it's not appropriate for me, if it's a broker question, I will refer you back to Eric and Colin and say, you need to get with them. That I can't answer that one for you. But there's a lot of moving parts. There's a lot of question marks. And by the way, I get a lot of phone calls from agents about, I have a file over at XYZ. Can you tell me what's going on? In fact, this morning, before this webinar, guess who called me? Raise your hand about your client who's someplace else. Raise your hand again. Wave it around. Do you see him? Colin. Okay, I've got a DHI mortgage. We were supposed to close on Friday. Now they're telling him it's going to be a week delay. Yada, yada, yada. Is this right? By the way, DHI did tell him the truth. It's unfortunate that they waited so long to cover the topic matter, but the process that his client's going to have to go through is real, and it is going to delay his closing. So feel free to call me about other lender stuff, because I will tell you the truth.
Yeah, and Robin, I'm going to get on my soapbox here for just a quick second. Ladies and gentlemen, as we go through all this stuff, there's a lot going on. I'm pretty sure a lot of y'all's heads are just absolutely spinning watching this. And I think it's really important to note that, no, you do not need to remember all of this, okay? You don't need to know what the credit score is. You don't need to know what this is. I mean, that 580 number is pretty important if you want to ask your client. They're like, oh, I kind of suck, and, my credit's bad. It's kind of important to know that 580 is kind of a magic number. If they know they're below that, you can still get with Robin, because she said that they will say, hey, this is how you fix it. This is the fastest way to fix it. And they are credit ninjas. They spend a lot of time working with credit. They know how to do that. But I think the most important thing, guys, is watch this again. I'm obviously going to post this again. I'm going to put it up on the Facebook, and I'm put it on YouTube, but get them in front of Robin. And again, guys, it's not your choice if they use Robin. I usually start with Robin because, like I said, I don't have a lot of problems with Robin's closings. I mean, everybody else's DHI one that I was calling her about this morning, it drove me crazy, because literally we're supposed to close Friday. They're calling my client at 7:30 at night on a Tuesday. I'm like, you got to be kidding me, and I don't know what's right. And she's even going to help me work through that. And turns out it was right. So whatever. But guys, get them in front of a loan originator. That is step number one. It's got to happen. The main reason for this process and going through this today is to kind of explore what they need to expect, what you need to set them up for, and get that process going. Because a lot of it's just kind of this magic thing that happens behind the scenes, and it is as well. And I say in jest a lot of times, every time somebody has a question about finance or mortgages or whatever, call Robin, call Robin, call Robin. I knew the answer to a lot of these things, but even then, I'm not even going to pretend to know it. Call Robin. I'm probably drive Robin crazy, but it's that important, guys, because without money, none of this process works. None of this process works. And like I said, like she said, don't be afraid to reach out and ask some questions. So with that being said, does anybody have any questions about anything that they saw?
On the path to home.
Oh, go ahead. Sorry, James.
Oh, go ahead. You go first.
No, it's all right.
On the path to home ownership, is that a program that you're putting people in, or is that just certain pointers that you give them to get their credit right?
That's a very good question, James. The path to home ownership is a letter, and it's typically sent in email format, and it gives them exactly what they need to do to get themselves in a position for their credit risk scores to increase. So, and it's individualized because everybody's path is different. It also gives them some tools that HUD puts out if you want to learn more information. And if the credit is really bad and I can't get them there fast enough, and for me, fast enough is 6 months, then we will recommend the credit repairman and say, if you want to expedite this process, here's a resource, pick up the phone and call them. You may find this to be an expedited way to get this done. So the credit repairman is who I use for that service. If you have a partner, a credit repair partner that you would prefer for your clients that I recommend, you just got to shoot me an email and say, hey, on my clients, we use, I don't know, whomever. Be sure to use that name and not the credit repairman in your path to homeownership letter.
Okay, I've talked to a lot of people that have credit issues. Do they need to get in contact with you to run their credit, and then you give them a plan after they run it, or do they just provide you with the report?
I'll take either. If they've got somebody else's report, I can do a quick look. But if you want me to do a true analysis, they've got to apply.
Okay.
And that analysis is done. I don't know if you know this, so if I'm telling you something, I'm sorry if I'm, covering topic matter that you're already educated on. The credit bureaus offer what's called a credit simulator. So if I go into that exact credit report and I engage the credit simulator and I say, what if they make their payments on time for the next 12 months? What if they pay off this collection? What if they bring their credit card balances down, instead of them being, 110% of their credit limit, they're 10% of their credit limit? What if they open up a new credit card account? I go through a bunch of what ifs to try to get to the shortest timeline and a true path. So when I give them a path to homeownership, it isn't just me kind of going, well, make your payments on time, clean up your credit, whatever. Anybody can tell them that. That's all logical, right? That's all stuff you should do. This is very specific. And then it's based off of something that I have in writing that shows how much your scores will go up. So I've got something to back it up. I didn't just make this up to tell you your scores will go up 50 points. I got a sheet of paper that says, if you do this, and this, your scores will go from 580 to 640 in 3 months, 6 months, 9 months, 12 months, etc.
Okay.
So pardon me?
Can you provide us with that initial document to send to them, or is that just, wait?
I can.
Okay.
If they apply, I'll tell you one of the best sheets of paper in there for you. You don't really care about all the other stuff in between. But when they apply, before we get going, we send them a packet that says, thank you for applying. You've engaged our services. One of the sheets of paper in there, and it's a packet, so it's professional. It makes them feel good. She gives them some credit and analytics. But the meat of it, the reason I send it, page 2, bottom line, small print, it says you are giving Robin permission to share credit sensitive information with your realtor.
Okay.
If I don't have that document, I cannot share anything with you. If I have that document signed and executed, and I will say, is James Carter your real estate professional? And if they say yes, then we've gotten permission to share income, credit, appraisal, everything.
Okay. Thank you.
You're welcome.
And encourage your buyers to do that unless they just feel weird about it, because it really helps. Since you spend so much time with them, you're in the car with them, you're looking at houses with them, you kind of create a sense of trust. And so when you translate something that Robin says, a lot of times I can't tell you, I can only think of one client that I've ever sent to Robin that's actually met Robin. They spend a lot of time on the phone with her, sure, but seeing you face to face, if you need to translate something, I think it makes it a little bit easier for everyone. Any other questions? Joey, what was your question?
My question is just a general kind of thing that I've been running into. So I have clients that get pre-qualified with a lender, but then they end up buying a new build. And, all these new builders, they have their own lenders and everything else like that. And it can affect the actual contract. So, you ask for closing costs and they're like, well, unless you use our lender and our title, you lose out on my recent ones, like $7,500 in closing costs and title fees, and et cetera, et cetera. Robin, what's your opinion on how to handle that? I mean, do you have an opinion on it? Because I feel, for me, it's kind of one of those double-edged things. Obviously, I'm representing my client. I want them to get the absolute very best deal for the home that they're purchasing. But I do feel like you're kind of in a position of, where you're forced into it with these other lenders. Do you have any kind of like opinions and or thoughts on how to handle something like that from the get-go? I mean, what have you seen when it comes to that? Because I've been running into it a lot, just because of all the new communities.
Before you answer that, Robin, I'm going to jump in real quick, Joey. One of the first conversations I have with my people is because they want to go drive around on their own on weekends, and then they're going to go into one of these places just by themselves, and they're going to get roped with a real hard sales thing. You make damn sure they understand that you are their realtor. And if they go to one of them on their own, it's fine, but make sure you put my name down on any piece of paper, because that's how you're going to find that out the quickest. Because the minute they do anything, that the whatever builder has to inform you. And so just make sure they understand that very, very honestly. And then that's just important side note, but Robin, go ahead.
Joey, it's a good question. And from a lender perspective, here's what I say when it happens. Damn.
Okay.
And then I take a deep breath and I think, I just did all this work and I won't even have opportunity to play. And I don't typically have opportunity to play. For those folks that want a pulse check, I'll say go through the application process, send me the loan estimate that this lender provides you. I'll do for you a rate check at this time, and then send it to me again when you lock, and I'll do a rate check for you. 99% of the time, I can't touch it. The seller's providing too much contribution for me to be able to hit those numbers. When we end up with new builds is when the lender can't figure out how to get them qualified. That's usually the only time we'll end up with them. So yeah, it's bad. And because the builders own the mortgage company, Colin and I had this discussion this morning, you just don't really have a choice.
Yeah.
One, you don't have a choice. Two, if they don't perform, which in Colin's case, they're not performing, his client has a choice to walk away from the deal. He's 10 days from moving. He's already got the moving truck scheduled. He already told his, landlord, I'm not going to renew. They don't care right now. I mean, the housing is out of shortage. So if your client walks, somebody else is going to buy it real quick. So they just don't care. You just got to work with them and try to keep it positive for the client so that they don't, they don't fall off the bus, so to speak. For me, I just tell the client this: if you have anyone else that, I'm glad I could get you to the pre-qual stage. If you have anyone who's looking to buy, please send them my way. That's all I can do.
Yeah, it just seems so shady. I don't know. I don't like the practice, but at the same time, I was just kind of curious as to, an actual person who does the work from a loan officer's, standpoint of what it's like, because, you do the work and then, there's really not much you can go on. So anyways, thank you.
Yeah.
You're most welcome.
I will say, I know Robin's very graceful about it. It is ultimately a waste of her time. I mean, it's kind of frustrating for her, and I get it. And she's right. They're hard because they're going to make money on selling the loan. They're going to make money on this. They're going to make money on all that. So they're able to give those contributions, but it's always good to get a second opinion. And with that being said, Robin, can you please inform everybody about how many times they can have their credit pulled? What impact does that have? Because that's always everybody's biggest beef in my experience is I'm like, hey, you need to contact Rob. Is she going to pull my credit? My credit will go down. Will you please explain that to everybody, what actually happens?
Yeah, I'm going to explain two things about credit. I get that question all the time, but a credit pull by multiple lenders within a 30-day period is considered one pull. A credit pull by multiple lenders in a 30-day period is considered one, and people love to use the term hard pull, even though they don't really even know what it means, but one hard pull. Okay, that's number one. So your client can go they can go to as many lenders as they want to in 30 days. It's not going to impact their scores. 2, the credit scores that you are getting from Discover Card, Capital One, Visa, MasterCard are never reflective of mortgage scores. They are typically 20 to 40 points higher than mortgage scores. What? How come and why? Because every industry has their own FICO rating system. The car industry has their own rating system. Mortgage has their own. Credit card companies have their own. Insurance companies have their own. So all of us pull a FICO, but we have that black box built differently. So we end up with different scores, even though we're analyzing the same raw data. I get that all the time. And then here's what they're going to say to you. Well, because they pulled my credit report, my scores went down. No. If your credit scores are over 720, having a mortgage company pull your credit report usually doesn't even impact your scores by 1 point. It does not impact your scores. It's a collateralized debt. Collateralized debts do not impact your scores unless you don't pay them on time. But those are the 3 topics I get all the time. 1, how's it going to affect my score? 2, you pulled my credit report and now my scores dropped. Well, your scores never were that high for, mortgage ratings. And, 3, how come it's different? And that's why. So we get that all the time.
Yeah, basically, don't be scared. You're going to have to do it sooner or later. You've got 30 days to do it over and over and over again without any impact, and then it bounces right back anyway. Translated. All right, any other questions? Did everybody?
I just have one more, and it's a quick one. How involved as an agent for a buyer should I be with the lender, or finding out where it is, the process and everything else like that? Like how much up in somebody's business can I be?
I guess it depends on how close you are to that client. I mean, if the lender calls you and says, hey, I'm not getting cooperation from the client, I need, can you encourage them to, turn in the sheets of paper? There's really nothing a lender's doing other than trying to get everybody on the same page. Now, if a lender drills down to the point of, let me tell you about the bank statements and what I saw in there, maybe, and it wasn't for a good reason. You know what I mean? It wasn't like, hey, I found a child support payment on it. It was, let me tell you where they're shopping. Let me tell you what they're doing on Saturday and Sunday. Let me tell you, oh my God, I saw on his bank statement that he bought jewelry. And when I mentioned to his wife, oh, I bet that piece of jewelry is pretty. And she said, what piece of jewelry? Do you think he's having an affair? Now, maybe you're crossing weird lines here, So I think it just depends on how the information's being used. I always ask my clients up front, first of all, we get them to sign that pre-qual package. If you don't sign the package, I don't help you, because I'm not going to get myself in a lawsuit over stupidity, right? I can protect you and me on that. So I won't talk to them until they sign the pre-qual package. But when I'm interviewing them, because I do that after they send sheets of paper in, I'll say, are you comfortable with me sharing information with your agent? And there are people who say no. And if they say no, I will tell you that. I can give you limited information, but I can't drill down on anything. They've asked that their information remain private. That's it.
And don't take offense to it, guys. Don't take offense to it.
Oh, I wasn't actually, you see, my question wasn't so much about their personal business, because that's their personal business. I was more along the lines of like following up on deadlines and making sure to see where the loan was in process to make sure everything was on schedule to close when the closing date says, that kind of thing.
Oh, I think you're very prudent to do that. Okay. Unless you're in a long-term relationship with somebody as a lender, it is very prudent on your part to follow up and say, did this milestone get hit? And that's probably what we should cover in our next video is what are the milestones, so that you have a sheet of paper in front of you where you can fill it in, done, talk to the lender on this date, done. I think it's very, very prudent on your part. And by the way, we don't take offense. I mean, I'm dealing with a lot of clients like you are. If you call and I'm like, oh my God, I can't forget to do that. You know, it also keeps our team on their toes. So no, I think it's a great idea.
Okay.
Yeah, wonderful. So guys, good information. Again, I'm going to reiterate what she said. If you email her, she will send you this presentation. So you can add this to your listing presentation, your sales presentation, whatever it is, because most of the time when people are listing, they're looking to buy another one, right? So get this information from her. And the more you educate your clients, the more you tell them about what to expect, the less panicky they get. This is a very stressful thing. I kind of laugh because, you know, over the past years, I've been parts of hundreds of real estate transactions. So you get the hang of doing this over and over and over again. And most people, this is the first time they've ever done it, and or the first time they've done it in 20 years or something crazy like that. They don't know what to expect. So that's a great piece to add to whatever presentation you're using. So that way they know what to expect, because money and buying a house are two of the most stressful things. And that's what Robin deals with, both of them. And so if you can tell them, hey, look, and the way I always explain it, guys, it's kind of funny. I just so y'all have something from me. I always say, look, when it comes to money, I would like for you to call Robin. You're welcome to work with whoever you want. I've just worked with Robin a lot. She actually teaches other loan officers, so she knows this whole thing inside and out, every law, everything. She's a broker and a banker, meaning she has access to multiple lines, depending on what it's going to be for you. If it's FHA, VA, personal, whatever, she's going to be able to help you out. I would start there. If you don't like what she says, then you can go look for another one. It's fine by me. It doesn't matter, but we have to get you pre-qualified. Now, here's the part about being pre-qualified. At the beginning, they're going to ask you to fill out an application. They're going to run through your credit. And then in order for them to give a difference between pre-qualified and pre-approved, which we'll go into that one, another one. I don't want to open that can of worms. They're going to need to dig through your finances, and it is going to be uncomfortable. They're going to want to know every single dollar you make, where it comes from, and every single dollar where it goes. Okay. They're not going to judge you if you're buying ice cream, you know what I mean, or whatever. They're not going to judge you, but they have to be able to qualify it because of the Dodd-Frank laws that came out after 2008. So it's going to be uncomfortable. She's going to want to ask questions that you don't want to answer, or you just feel like, why does she have to know this? It's not because we're nosy. It's because federal law mandates that. So we have to make sure that you can repay this loan. So that's just get ready to get uncomfortable. It's going to hurt a little bit. Then once you get approved, we can go out, we can go shopping, we find the house, and before you close, you're going to have to do it all again. They want to make sure that even though now you found the house, they're going to qualify the house, they're going to qualify this, and then they want to make sure you didn't quit your job or pick up a drug habit or whatever. They want to make sure you can still repay for this. So it's going to kind of be irritating a second time. But if you listen to Robin and do what she says, that's great. I said, guys, whatever she says needs to trump anything I say. So if she tells you to get her some documentation and we're supposed to go look at a house in 10 minutes, do the documentation first. We'll go look at the house later, because without all of this going on, nothing matters. So, and that's kind of the spiel that I give. Get ready. You're going to get a full rectal financial exam, and they're going to do it twice. Okay. Just do what she says. Let's figure this out. So that's basically my spiel. And with that little presentation, it'll probably be a little more professional this time. Thanks, Robin.
I like the forensic, and it'll hurt, a little bit.
I mean, it's uncomfortable with people. Nobody likes to talk about money, right? Nobody does.
It is. And it's boring. Trust me, I know it's boring. I try to make it as exciting as possible, but I get it.
All right. Well, guys, if y'all don't have anything else for Robin, I think we need to let her go to work. Thank you all so much for being here. Give me a little bit. Hopefully by the end of the day, if not tomorrow, I'll have this up on the YouTube channel so you can watch it one more time. Do not forget to email Robin right here down at the bottom of her page, rmorton@mfsus.com. R. Morton, email her. She'll send this to you. Add it to your presentation. Print it out. Look more smarter. Sorry. I think I'm funny.